To the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the A.J. Brown Show. My name is Cyprian Francis, and with me, as always, the main man that we named the show after, A.J. Brown. Good morning, A.J.
Hey, Sip. Glad to hear from you. Glad to see everybody's on the line.
We are kind of back in the full swing of things, right? Everyone's back from vacation. Fall is here, I believe, or right around the corner. Back to school. The markets are ramping up. We had a big Fed decision this week. What are your thoughts on everything going on in the market?
Well, yeah, we just entered into the fall season. People are all stoked about being back engaged. No more summer vacations. Kids are back in school. And yeah, we had a Fed meeting. You know, there were some tunes, Sip, about perhaps them raising interest rates by a point. They didn't do that. They did 75 basis points or 0.75%, but it was the rhetoric that came with it. So, you know, the Fed needs to change behavior. And it seems like their rhetoric, and I've said this so many times before, but it seems like what they say could have just as much influence on the markets than what they do. Because if we take a look, I'm going to share my screen really quick. We look at the two tools that the Fed has, and we know they just raised interest rates by 0.75 of a point. They could have raised them by a whole point, but they went with 0.75 of a point. But we also pay attention to that bond buying, because that bond buying is that kind of secret tool that they've been using since 2008. And it doesn't get as much credibility. But interestingly enough, you know, with all of the bonds that they have bought in the treasury bond world, in the mortgage-backed security world, in the corporate bond world, I was just looking this past week, they own more than 40% of the mortgages on the housing real estate, on real estate in the United States. 40%, one customer, the Fed, is backing all of those mortgages. I mean, when you wrap your head around that, you know that this bond buying activity that they've been doing with that hasn't gotten quite the focus as the interest rate tool that they use. I mean, it's a big tool, and I keep drawing our viewers' attention to it. When I look at the 3-month, we knew last week that something kind of sparked the Fed to start buying again. They've been on this selling tear, and there was buying last week. Well, this past week, it was just released last Thursday, or, you know, yesterday. If I look at the current release, it looks like there was even more buying. So they're very strong with their words. I mean, Jerome Powell said some really scary stuff on Wednesday, but then their interest rate hike wasn't as much as it could have been, and they've reversed their selling of bonds to be more buying of bonds. So their words aren't matching their actions, and I think it's because they know their words are potentially more powerful. And his words were, you know, different than previous Fed meetings where there might be some light at the end of the tunnel. His words were, you know, this sucks. We're going to sacrifice employment for getting this under control, and we ain't stopping. You know, this year alone, we plan to do at least another 0.75 point rate hike, and then a 0.5 point rate hike and around the holidays. And we're going to keep going into 2023. And he said, you know, basically, we plan to overcorrect, which basically means throw the economy into hopefully only a slight recession. And that freaked investors out.
It certainly did. And when the news came out, we had a pullback. The last 2 days have been down days, and I think we're starting to get close to our lows for the year, because I'm starting to see the articles of bear market, right? Like the talking heads love to tell us that we're getting into a bear
Yeah.
market.
Well, yeah. So, we don't like to listen to the talking heads. We like to look at the charts. I mean, some of those companies, I'm thinking of PayPal. I'm thinking of companies like Netflix. I'm thinking of companies like Black and Decker. I mean, across the spectrum, they have pretty much given back all the gains they made during the COVID pandemic. So already they're back down to parity. It's as if the last 2 years didn't exist for them. And we like to look at the S&P 500, which I've got a chart up on the screen right now. And we've been following this downturn. And if you guys have been tuning in, you know that we came short about 2 weeks ago of continuing our uptrend. We actually came, and this move that I've circled here on my chart is not only a contraction move for a downtrend, but it's an ideal one. It came to the right level, and so we've been now watching carefully this next move. And this next move, in order to be an ideal move for an expansion, simply had to get past that 3,860 mark. I mean, as of right now, we're at 3,695. So we've more than passed our mark. The bear is what we say jumping out the window, right? We say the bull climbs up the stairs and the bear jumps out the window. We say that because when people are thinking about a risky asset class like stocks, they put their money in a little by little, and if they see gains, they might put a little bit more, but they're very cautious about putting money into a risky asset like the stock market. So when we see bull markets, it's always slow and very figured out. But when the proverbial poo hits the fan, right? People are not going to be slowly removing their money from a risky asset class like stocks. They take it out all at once, and it's called the bear jumping out the window, and that's what we're seeing right now.
And so my question looking at this chart is what am I looking at in terms of levels to the downside?
Well, we'd have to go back to history. I mean, as far as I'm concerned, I hit my level to call this a downtrend, and we're in it. If I go back a year, I mean, I guess this next level that we would be looking at is the same level that we sort of saw at the end of the other downtrend that we were in, and that would be around the beginning of June timeframe. It looks like we're going to see whether we test around 3650, 3675, somewhere in that range of 3,650 to 3,675. I actually believe we have to go back a little bit further, Sib. And I actually believe, and don't get me, I'm not one of those people who believes in the woo-woo magic of like the Fibonacci price retracement lines and or things like Elliott waves. But man, I cannot deny that this is a Elliott wave forming up. And if that's the case, this next Elliott wave could go, 3,200. It looks like we've got a level down at 3,200 set a couple of years ago.
Sure. So my question from this analysis is, we saw you dropped the video this week talking about how when there's fear in the market, more people buy options, and so looking at this chart, I would assume that the VIX is heading in the opposite direction, and it kind of is.
Yeah. So it is. So here's the VIX. Let me zoom back into more current on the VIX, but the VIX is on its way back up. And so that means, the beautiful part of all of this is we just need to take inventory of what the heck is happening, and then we can trade it with options to make a profit. See, we don't have to get all melancholy because our big investments, we're not directional traders that are stuck in the primitive belief that we should buy and hold, right? Instead, we've got this tool set of option strategies that, so long as we know what's going on, and so long as we take inventory of what patterns we're seeing, we can then apply the right tools to profit on it. So, just like you said, uncertainty and fear is going up, and that's why the VIX continues to go up. There's uncertainty and fear. So, as option sellers, we need to be selling uncertainty and fear because that's what's going for top dollar right now. If we sell uncertainty and fear, we're going to get more money for it than we did before. That's at a high level. What does that mean? It means that a component of an option's price is this implied volatility, is this uncertainty and fear. And so instead of buying options right now, we need to be thinking about selling options that have been optimized for this uncertainty and fear parameter.
All right, and so that's what we're gonna do. This is the VIX is a representation of the overall market, but what you do at Trading Trainer and in your course and in your weekly mastermind is identify individual opportunities where this logic comes into play. And so, what we're gonna do is we're gonna give everybody a chance. If you have a name or a ticker that you're looking at, feel free to drop it in the chat, and we'll see if we can get AJ's analysis of the strategy on that name. Also, what I'm going to do real quick is if you haven't checked out AJ's webinar yet, I'm going to go ahead and add a link to AJ's webinar, which is going to give you an opportunity to learn all these strategies, get in there, see some examples, see some more in-depth walkthroughs. So we're going to throw that into the chat. We're going to take a little break here, invite everybody to check that out, and then we'll go through some of these names and see if we can identify some good opportunities, which, I have no doubt because that's what we do every week. So we'll be back, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
And so our first name is a topic that every once in a while we talk on the show, but we don't really go into the core crypto coins. And so your pick of the week is a crypto name. It's Block Incorporated, ticker symbol SQ, and it looks like you've got some interesting ideas on this name. So what are you seeing, AJ?
Yeah, Block Incorporated, previously called Square. So if you kind of want to trade some crypto influenced stock symbols, SQ is a great one to do it. They're into these blockchain financial instruments, and crypto is really taking a hit, right? And so it's not that we're going to profit or lose on this crypto hit. It's how do we make profit on it? And by using SQ, we can use some of our option strategies because SQ is very much optionable. So we can use SQ and we can kind of trade the downturn on the crypto. And last time I heard Bitcoin's falling pretty quick. Ethereum is not doing so well as well. So how do we profit on that? Now, we could trade some, standard directional strategies, but I wanted to introduce a couple of topics today and just kind of wet your palates with this. So first of all, we're going to focus on Square because that's going to be our representation or kind of our getting our toes into the crypto market while staying into the stock and options market where we are familiar. But I want to introduce something called ratio spreads, ratio call spreads, ratio put spreads. And I'm going to do that by using yet another tool called profit and loss diagram. So let me just show you a profit and loss diagram here in our tool. Profit and loss diagrams for you kind of neophytes out there. These tools are a way for us to understand how the option strategies work. It's like the option strategies fingerprint. So along the x-axis or this axis is what we call the independent variable. And that independent variable is going to be the underlying symbol price. So you can see along here, we've got prices of SQ that we can see. And then as you can see here, we've got plus and we've got minus. This is the profit or loss of the option strategy. And we can look at it with respect to what the option strategy costs now. And we can also, if we are going to be using our option strategy through expiration, a lot of times we can preview what it will be at expiration. So these things, when you get really deep into option strategies, you use your profit and loss diagram to fit to the stock pattern and to the other patterns of fear and uncertainty and time passing by. You use this P&L diagram. Each option strategy has its own fingerprint. Okay. So what I wanted to do is kind of introduce a trade that might be interesting on the square. And there's two different versions, right? So I'm going to come on back to the chart. I'm going to take a little bit of a look here. And so let's construct something. I'm going to come back to the options. And I'm going to use near-term options. So I'm going to use the options that expire on October 21st. And I'm going to start with a call ratio back spread. So let's start off by saying, for instance, that I'm going to buy the 5750, or not buy, I'm going to sell the 5750 call option. So I'm going to add that right here. Let me do this and change this one around. Let me get rid of that. Perfect. So I'm going to sell the 5750, and with the credit I get from that, I'm going to buy 2 of the 6250s. So I'm going to change the quantities of these. So in other words, I'm selling 1 that's worth a lot of money, and I'm buying 2. And the idea is to basically make something that's close to break even. There we go. So I sold 1. You can see that down here. And I know I'm getting deep into the details here, but I sold 1 and then I bought 2. So now let's look at the profit and loss diagram. Let's see what this fingerprint looks like. All right. So as you can see here, as I kind of squeeze it in and squeeze it in, there you go. If this particular SQ stays below 5750, both of these options are going to expire worthless. And this thing could go to 5750. It could go down to 4750. It can go down to 0. And as you can see, the selling of that one option and the buying of those 2 other options basically makes a break-even trade. The underlying symbol, that SQ, Bitcoin and all that stuff, could drop all the way to 0, and we have basically no risk in this trade. As you can see here, this little green line, this is the line at expiration. It doesn't change. It's just slightly below 0. It'll be a little tiny bit of loss. But what this trade sets you up for is what happens if there's a potential like run up in Bitcoin for something unexpected happens. So a break-even trade most of the time, but if all of a sudden there's a pop in price, this thing has a 2-to-1 ratio once you get above about $68, and it shoots to the moon. So if you believe all of a sudden like something's coming around on the horizon, that there's a small chance that the crypto world could go crazy again, there could be a pop in price, this would be an awesome trade to put on it, because if you're wrong, no harm, no foul. The big risk, and I just want to make sure I always point out the big risk, is there is this kind of uncertainty zone between about 58 and 68. So if I take a look at that on the chart, there is this kind of uncertainty zone up here, like right around here. So if you continue to see it go down, no harm, no foul. If it pops up above 68, big wins, big wins, big wins. So it's a cool hedging position. And yeah, let me let you talk for a second because I'm going to show the opposite too.
Well, I was just gonna say, when you look at, I don't know how far back we're looking at this screen here, but if you go back, I don't know, 3 6 months, there's upside potential, right? So like it has the legs to get back to those levels. So that 2-to-1 ratio is really nice, and
no loss. Like for instance, if the cryptos continue to go to zero, this is not going to lose. So if we stay below that lower strike price of 57.50, it's a break even trade. So we're protected to the downside, but there's that potential that if it pops up above 68, if it goes up that $10, like it went down in just the last few days, it only took about 3 or 4 days, it could totally pop up again in like a little pop like it did right here. We'd be positioned so well to make 2-for-1 profits.
yeah, and we know how crypto moves. So, some news here or there can certainly drive one of those assets, 5%, 10% in one day. Definitely have seen it in the past.
Now let me show the other trade, Sip.
Let's
So
go.
the other trade is, what if we do that with puts instead of calls? So what if, for instance, I go ahead and I sell one of these 5250 puts, but then I come back and I buy 2 of these 47.5 puts. So I sell one, and basically, again, I'm creating a break-even trade. Let me just adjust these quantities. That's why it's called a ratio spread, by the way. It's because it's not an equal number. You have enough to cover the one position, but then again, you've got that double the factor working. So here's what we've got when we draw that. Let me disable the other one. Boop and boop. So here's where you would say, actually, if there's any movement up, as you can see here, nothing's going to happen. But if I continue to shoot down, I'm going to get that 2-for-1, especially if I start to really cave down. I want to get past this risk zone right here. But once I do, I'm at 2-to-1, gains. So again, if all of a sudden crypto pops up, no harm, no foul. This trade's not going to go against me. It could go all the way to infinity and I'm not going to lose anything. But man, if it keeps going down, I'm going to start capitalizing 2-to-1 at expiration. It's like a winning trade. It's quite powerful, actually.
And what's the term for this spread?
It's called a ratio spread. This one's called a ratio put spread that profits to the downside.
All right. I love how we're going a little bit exotic with the option strategies
A
today.
little bit exotic, but these are the ways. Like last week, we featured kind of an exotic trade to profit off of the VIX. This is an exotic trade that would work perfect. And I know that I'm going back and forth here. I just get so excited, Sip. I start going back and forth in my chair like a little schoolgirl or something, but who's got a note from like some little boy that anyway, too much of that analogy. Yeah, this is one of those strategies that would work perfect for this particular symbol.
Awesome. Love it. And appreciate everybody tuning in. We do have a question that I think is a very relevant question that I think we should go over before we go into some of our user picks of the week. As always, every week people are tuning in and dropping questions. So we'll go through some of those. But Bradley, I'm going to go ahead and pull this up on the screen here. Bradley wants to know, how does the Fed, via raising rates, how do the higher rates pull more money out of everyone's pocket? How does this curb inflation?
Well, that's the idea. So the inflation is a combination of prices going really high because demand is really high, and demand is really high because people are getting a lot of money from their employers, and that there's this, we've been hearing for months now that there's 2 jobs for every 1 person. And so what the Fed is doing by raising interest rates and by selling bonds, or at least, like I've been pointing out, talking about this stuff, but not necessarily doing it, at least right away, it causes some fear in people because money gets expensive. As you pointed out, Bradley, money starts coming out of people's pockets, but money becomes more expensive. To borrow money becomes more expensive, so on and so forth. And so people are going to stop buying. It's going to quench that demand. That demand in return, in theory, is going to cause the businesses that supply that demand to not need to supply as much, and therefore they can like reduce the number of jobs. And so, these moves, and one of the things that Jerome Powell said on Wednesday is, man, we're going to attack this in the short term by really being aggressive raising rates. But he also pointed out that these effects take a long time to go through the system, like months, if not a year. And so we may not see the effects of him doing this 3/4 point rate hike until now. But at the same time, he said, but I'm going to be aggressive over the next meetings. And then right at the end, if you look at his actual statements, he said, and I don't know what effect this is going to have, but I do believe that employment or unemployment is going to start to tick up. And that freaked everybody out because basically he says, I'm okay if I overcorrect and put the economy into a little bit of a recession. But basically, by making money more expensive, it makes people less interested in using it. It makes companies who have been making windfalls and profits kind of perk up and say, oh my gosh, money is getting expensive. I better, perhaps stop raising prices on people because they're going to stop buying my goods. It's a theory to try to get the economy to balance itself because it's this vicious cycle and it's almost like a tornado right now. And so they're tamping that tornado down by making money expensive.
It's almost like we're playing catch up from like the past 2 years of all the leniency, right? Of making money so accessible.
It's very much true. And the Fed, I know I harp on this a lot, Sip, but this tool that the Fed uses, this quantitative easing tool, is kind of an interesting. Like I said, they've always relied on interest rates, and they just started using this tool about a little less than 15 years ago, which is like nothing in economy wise. And this bond buying tool, it's like a brand new pharmaceutical that the FDA hasn't quite approved yet. It's a drug, right? And it seems like when we first started using it in 2008, it had more effect than it's having now. And we have to use more of it now to get the same effect that we had back in 2008. I mean, in 2008, the Fed buying $1 trillion worth of bonds was like earth shattering. This most recent tranche that they bought was $4.5 trillion. And because they had done that bond buying, there's an argument in a whole bunch of white papers, and I know I'm getting into geek speak here, but there's an argument that they couldn't, not that they didn't, but they couldn't have raised interest rates earlier, even though it would have made more sense to get this whole baby under control faster. So they're playing with some uncertainty here. They're playing with this new drug, and they're really not talking about it as much as they are the old drug, the interest rates. And it scares me. But again, as an option trader, nothing really scares me. As an investor, nothing scares me because so long as I take note of what's going on, Bradley, as an investor, I can profit off of it. So even though prices for me are a little bit higher at the grocery store, I can make sure I'm on the correct side of this equation when it comes to buying and selling stuff in the markets. And I'm going to be still making as much income as I always have because I'm an options trader.
That's right. And that's why we invite everybody who's not a member to come and join us at Trading Trainer, because that's what we're here for, to talk about making money in investing. No matter if the market goes up, down, sideways, there are strategies, and that's what we're going to get into now. And so throughout the week, some of our members have some names that they're discussing and some ideas that they're throwing out. And the first one here today is from Martha in Santa Fe, New Mexico. She wants to know about a company that I believe we've discussed before, and that is Rivian Automotive, ticker symbol RIVN.
Yeah. Okay. So Rivian, if we're looking here at what, a 2-year chart, maybe a 1-year chart. That's a 1-year chart. Let's come in. This is a 6-month chart. In fact, what you'll notice here on Rivian is that it looks to have established a line of support, and it looks to establish a line of resistance. Remember, to establish a line of support or resistance, we need a minimum of 2 tests of each. And the more tests you have, the more bought into those lines of support and resistance that investors are. In other words, I think I just talked a little bit like Yoda, where he reverses things, But yeah, we've got enough tests here that it looks like 32 is going to be our level of support. Maybe 41 is going to be our level of resistance. And this is a sideways channel that perhaps we can sell some premium against. Now, I'm gonna qualify this a little bit. It looks like the sell-off in the markets, the bear jumping out the window that we've spent the earlier part of this call talking about, it's not being specific to one sector or another. So I would be careful right here, because if we find a bottom here, traditionally what we would do is buy some Rivian stock or buy some call options that could be a replacement for that stock, and allow those things to appreciate. But if there's an overall kind of down pressure on everything, I'm not sure if I want to be buying anything at this moment. So here's what I would do. I would go ahead and kind of plan out the trade, know, for instance, what transactions I want to make and what kind of timing signals. This looks like a beautiful symbol for trading the fast MACD. So if you use the fast MACD to tell you when there are tops and bottoms, this looks like it's a perfect symbol for that. And I would paper trade this next bottom, not real money trade it, and see how the trade works out and where it goes. And at the next top would be where I would be more likely to be interested in getting in with real money. In other words, at the next top, instead of buying the stock, I would be doing the opposite. I would be shorting the stock, and then I would be selling put premium, and I would be basically setting myself up in the long term for any sort of down movement on Rivian, but in the short to midterm, making profit on all the incomes. So paper trade this bottom, I think. See how the trade works out, because we've already had one bottom to date, and we've had a couple of tops. See how the next cycle works out in your paper trading log, and then let's see if we can't trade the next top.
Yeah, and I wonder, there was some news yesterday that came out of Tesla about them recalling a bunch of vehicles because of the windows will jam your fingers. So I wonder if it's that down pressure might have an effect on just the overall automotive market. Sometimes it does, sometimes it doesn't.
The automotive market, and we talked about this like five shows ago, but the automotive market is still extra hot. And we talked about how their loans, a lot of the auto companies went from being companies who make cars to more like banking companies, because they make more money on the loans than they do on selling the cars. So the cars are kind of an afterthought. That automotive, I check in with that sector every week, and it still has yet to cool. So there's some room to cool. But Rivian is a new company in that whole electric world, and there's it's law now. There's a whole bunch of money coming the way of electric vehicle manufacturers, both from the manufacturing side, and the consumers are going to be getting a whole bunch of discounts moving forward. So you never know. This might turn out to be one of those contrarian stocks. So while the market is correcting itself, people will still be getting these benefits to be buying these electric cars, and Rivian may go up. So you never know.
Yeah, there's definitely some support and resistance developing there. So good pickup there, Martha. All right, moving on to our next name. This is from Tandy in Knoxville, Tennessee. She's curious about Plug Power, ticker symbol PLUG, which I believe is a end-to-end green hydrogen ecosystem production, storage, and delivery energy generation company.
In other words, this is one of those companies, those startup type company. I don't know if it's a startup, but they're interested in renewables and they're interested in unique ways to store that energy because renewables tend to be intermittent, meaning they're only producing power some of the time. So what do? You have to store it up. And it sounds like these folks have decided to go the way of hydrogen. Let's take a look at the symbol here. I'm just looking at the price pattern. Um, well, it looks like I'm going to go out a little bit. When in doubt, take a bigger picture. So I'm going to go out a year. In fact, I'm going to go out 2 years. All right. Uh, so there's pops, especially around earnings. It looks like earnings itself, they haven't yet figured out how to make money as a company. It looks like they've been losing, but it doesn't seem to thwart investors. Investors get excited and then get fizzled out, excited, fizzled out. It looks like there's a floor at $15. So here's what I think about Plug Power. Let me go ahead and again, they might be. I'd want to do a little fundamentals research because they might be in line to get some of that money that has been set aside for these type of companies. But in the meantime, in this short duration pattern, it looks like we're going to be going for a downward ride. And we just kind of confirmed that in the last 2 or 3 days. So this would be a great place for us to do a directional position, Tandy. In other words, either short the stock. If you have a margin account, you could short the stock. When you short a stock, basically it means you're going to be buying to open a position. You borrow those stock shares from your broker, and then you actually, I said buying to open, I meant selling to open a position. So you borrow these shares from your broker, you sell them at whatever price they are, and then once it bottoms out, you buy to close the position. You buy those shares back, give them back to your broker, and you keep the difference between. It's still buy low, sell high. It's just that you sold first and you bought back second. And so you sold high and you bought back low. So you could short this stock, or you could buy some put options that would act like the stock only in reverse. So put options make money when the stock goes down. So either one of those would work, and either one of those positions could also be a covering position. So if this goes down and then say, for instance, it stalls at like the $18 mark, at the $18 mark, you could then sell some put premium, take advantage of all that implied volatility, buy yourself some call protection, and ride the stock back up, create an income trade out of it. So there's a lot of flexibility, but it looks like the timing right now might be interesting for you to do some shorting.
Awesome. Thank you for that, Tandy, and thank you, AJ, for that analysis. Moving on to our next name. I believe we've covered this name in the past. It's one of those industries that tends to be consistent, and that is American Airlines. And this is Matt from Atlanta. Ticker symbol AAL, American Airlines.
Well, now, isn't Atlanta the Delta hub? But in the meantime, American Airlines, and let's just out of curiosity, because I think the airlines have all been behaving the same. They're not in the news anymore. So this is Delta Airlines, JBLU, JetBlue. So how about United Airlines? Yeah, they all look the same, don't they?
Yep.
So, okay, American Airlines. Again, the whole... if there's going to be curbing of spending, it'll be on airfare as well. Although, if we're trying to get back to the way we were, There might be more business travel, and there might be more people who are still catching up on personal travel. Um, in the meantime, let's zoom into the last 6 months. I would be looking very carefully at this level around $12. So it looks like around $12 we have found support in the past. Let's see if that holds. If that holds, I almost feel like we, again, I'm going to say this, paper trade and follow a premium selling position, because I don't really want to be long anything right now. I don't want to buy and hold anything at this moment. Not right now, not this week, maybe not this fall, even maybe not this winter. So I'd rather do this on paper and just see how the trade works for doing some premium selling. And when it tops, maybe at $15.50, maybe at $16, when that thing tops, that's when I might be thinking about, hey, let's short some American Airlines, let's buy some put options, and let's set up a trade that we could make premium on, because it looks like American Airlines is set for giving us some premium. But if it does break down to the downside like the rest of the market, we'll be prepared to capitalize on that with our back month position.
Yeah, great pickup, Matt. We
Yeah.
definitely are a fan of the airlines, and so good.
They're
good
boring.
setups there. Yeah, boring is good.
And boring is good for this strategy.
All right. Well, we got one more late question coming in on a ticker that I think is worth checking out, and this is our good friend Tim is wanting to know about PAA, ticker symbol PAA. What is this? This is
Plains All American Pipeline.
That's right.
And so it looks like I've looked at this before, maybe in one of our workshops or maybe here, because I can see my telltale ruler applied here. So it looks like the Plains All American Pipeline is going down. And so pretty much the same thing. Now, here's something interesting. Plains All American Pipeline is definitely involved in energy plays. And this is definitely, a factor of not only the markets going down, but we are going to need, we typically see energy companies get a little boost, especially fossil fuel energy companies get a boost in the winter season because people buy oil and heat their homes with natural gas and things like that. But this one's got this whole thing going on with the whole skirmish that still continues in the Ukraine, right? And it seems to be getting even more heated because, the Ukrainians are making some progress. Putin is instilling the draft. People in Russia don't want the draft. There's all sorts of protests. And now there's even offshoot of protests, probably have nothing to do, but maybe, protests around the world. I don't know if you guys remember the Arab Spring, but they tend to be contagious. So now people are whipping off their hijabs in Iran. So all of this kind of unrest never means good things for energy. So if you're not in this position, I would recommend staying away from this position. But if you are in this position, depending on which way you are, if you're short Plains All American Pipeline and you got in on one of these highs, either the high from a few months ago or the high here, I would do what our plan tells us to do. Our plan, when we sell premium, our plan says if you're short the position, watch where it reverses. If it reverses within these ruler lines, then just sell premium against it and buy the protective call. If it doesn't reverse within these ruler lines, if it shoots down below that ruler line, screw the premium selling and just take profit when it does reverse at whatever place, because you're going to be making a lot more money, and the possibility that it's actually going to reverse and bring it back up to the channel reduces exponentially. On the other side, if you are in this position long, if you own some call options or you've bought this stock and now it's collapsing on you, have your stop loss in place. be ready to get out of that initial position and have your protective option in place too, meaning that protective put that's going to kick in at whatever price, maybe $10 or something, so that, you know, the protective option, having that belt and suspenders is pretty cool because the protective option starts appreciating in value. And the way that it works is its value appreciation offsets any losses in the other position. And so that kind of cuts risk there. But if you get stopped out of that other position into all cash, now that protective option gets to kind of, you know, whiplash you in the correct direction as an automatic adjustment. So make sure your protective options in place. Make sure your stop loss is in place. If you do get stopped out and you have premium sold, it shouldn't be a problem. Your broker might give you a little bit of static because you're not supposed to go long, but the money you make from getting stopped out of this position, that cash can cover your naked position here, and you can go ahead and sell that naked position, and if the underlying symbol is way down here, you'll be able to sell it for pennies. So, you know, you're good, or I should say buy to close. You should not have to pay that much to close that position. So even though you might give your broker a little bit of a stomach ache because you got out of the covering position and you're still in the naked position, you should still be able to handle that, and your broker should be able to get over it.
All right. Thanks for that, Tim. We got a full breadth of names to review for the week. I think we just covered 5 names. So thank you for that, Tim. Want to just remind everybody real quick that if you're enjoying the broadcast, if you're enjoying the show, hit that like, hit that follow, hit that subscribe button. If you're not already a member, we just want to let you guys know that AJ does have a brand new one-on-one coaching experience where you can work with a dedicated person to help refine your strategy, to help answer questions, to help motivate you to get into the mood to make some money. And it's just one of those things that you have a person there to help along the way. And so I'm going to go ahead and throw the link into into the chat. So if you have any questions, you can go ahead and jump in there, check out the info, check out the course, the curriculum, how it works. And if you want to even just have a, discussion with the details around it, if you scroll down, there's a little calendar that you can pick a 30-minute time frame to have that review and have any of those questions answered. And I mean, from what you've been telling me, AJ, there's a few people joining the program every other day, it sounds like.
Yeah, there's a backlog. But we've brought on 2 new coaches, and these are folks that have worked with me for over a decade each. So I'm very excited that they're on board. They've actually been in our community helping other members for years now, just, through the community forum and things like that. We've actually officially offered them coaching positions, and they're right now getting gigged up with my material so that we can meet the demand. But yeah, this program is getting pretty excited. People want hand holding, which is awesome because people have finally, they're coming to the conclusion that, having access to videos, only a few people, and I know I'm not one, Sip, have the discipline to just sit down and watch a bunch of videos and learn from videos. Other people like to have questions answered. When they have questions, they'd like to talk to somebody. They'd like to have a tutor, and that's what this is.
Sure. And so the link is in the chat. We're going to go ahead and let everyone check that out. We invite you to check it out to learn more. Ask whatever questions you need. The link is in the chat. All right, AJ, man, full show today. Heading into next week, anything we should be keeping an eye on?
I'm just looking for, when the bear jumps out the window, as they have, I always like to see where the floor is. So I'm just going to be trying to analyze, like we were looking at in the beginning, where might this bear land?
All right. Well, that's what we're going to be keeping an eye on. Once again, if you've enjoyed the stream, hit that like, hit that follow, hit that subscribe button. If you have any questions, feel free to drop it into the stream. Hit us on the DMs, and someone will get back to you as soon as they can.
Drop it like it's hot.
And with that, we're going to go ahead and close things out. AJ, thank you for your time. Everyone, thank you for tuning in, and we will check in with you guys next week. Have a good weekend, everyone.
See you, everybody.